Good morning, everybody. Today we are going to make an update on a couple of stock market indices. So I'm going to show you the charts of indices like the Nasdaq 100, the S&P 500, the Nikkei 225, and I will end with European indices, which are obviously the weakest. And we'll discuss especially the outlook on the DAX 30. Then I'm going to update the short-term view on the euro-dollar because the euro-dollar I think is back on an important support zone at 122. So if we start with stock market indices, I will start with the strongest stock market index, which is the Nasdaq 100. This index is the only one which made a pullback near January highs at the start of this week. But I mean, even the strongest stock market index was not able to hit new highs. As you can see on the Nasdaq 100, the 7,000 area provided resistance, so no breakout above January highs, and start of a significant pullback of the last three sessions. So for me, the technical message is not very good. It shows that even the strongest stock market index was not able to break above its January highs. Which means that at least the Nasdaq 100 should continue to trade sideways below 7,000 and maybe go lower in coming weeks. If I switch to the S&P 500, so big recovery during the last part of February, with the index retracing more than 61.8, which is a significant retracement. I was not expecting much more than this level, retracement to this level. This was done very quickly on the index, and what is quite important is that we obviously saw traders selling the index on strength around this level, so between 2750 and 2800. And the index in just 3 sessions has already retraced 50% of this recovery, which I would say is not really good news, and shows that the correction which started in late January probably has further to go, with more whipsaws ahead, difficult market conditions, and possibly lower levels on the S&P, and a continuation of the consolidation process. If we now switch to the Nasdaq 225, like the Eurostock 50, the Nasdaq 225 has retraced around 50% of its decline, not more. Which is a bit disappointing, I must admit. And what is even more disappointing is that in just 3 sessions, the index moved back close to February lows and back around its 200 moving average. So what is likely is to see sooner or later a drop below this support zone at 21,000. With the index possibly going to the next support zone between 20,000 and 19,500. What the best case scenario in the near term would be the formation of a trading range above 21,000, but I doubt that the index now will be able to go significantly above 22,000. So pretty mixed message on the Nikkei. Now, if we look at the DAX 30, a very disappointing market, even as the euro-dollar continued to moved lower this week. So the German equities remain pretty weak and are now getting close to, are already getting close to February lows, and likely to retest very soon the 12,000 area, which is a big support zone. Below this level, we have a Fibonacci support at 1170. So I think what is likely is to hit this support zone pretty quickly. Then after that, I think we can have a technical bounce from this important support zone, because I think the DAX may be building a major head and shoulder top. You can see here the left shoulder, the head, and possibly the formation of the right shoulder ahead, which means that I think European stock markets will probably stay highly volatile, and we will probably get new technical bands to build the right shoulder. So a pretty mixed technical outlook for European markets, and pretty difficult market conditions to prevail. I wanted also to show you the technical outlook of the Euro Stock 50. As you can see here, a very nice daily perfected setup 9 sell completed on Tuesday, followed by a very sharp bearish reversal. The message is that obviously that traders sold strength on this technical signal. It shows that once again European markets are pretty weak, and likely to at least to stay volatile, and probably likely to go lower in the short to medium term. I wanted to end this presentation with an update on Eurodollar. As you can see here, the start of the technical bounce from the 122 area, which I highlighted in Wednesday's weekly global roadmap publication. I'm not yet convinced the Eurodollar is making a significant trend reversal. What we can see is the start of a new technical bounce above the 122, 120, 150 area, possibly back to 124, 125. So I think that the recent weakness could be an opportunity to buy the Eurodollar on the dips. Something that reinforces this trading buy idea is also that the Eurodollar should complete today, so on Friday, a daily setup 9 buy, reinforcing the possibility of a trading buy around 122. Thank you very much, and have a nice day.